EBITDA is something you hear a lot from the big organisations: earnings before interest, tax, depreciation, amortisation. Now, to the big organisations, this is sort of the starting figure for what that business is worth. So it's quite an important figure to those organisations. If you're a smaller business, if you're an owner-managed business, I would be less focused on EBITDA for yourself, because EBITDA has actual costs in that that other businesses don't take account for. So it's earnings before interest. Well, interest for you as a small business owner, interest is an actual cost to you. It's something you need to pay. It's something you need to find. So it is important to know what your interest figure is and work with that interest figure. For a larger organisation that's, like I said, looking at their valuation, that's what they're looking at. They're looking at the worth of that business. So they're less focused on that. Like, so for an owner managed business, there is the focus on that. Similarly, tax, that is something, earnings before interest, tax, that is something you're going to have to pay for as a small business owner. Then we've got depreciation. The assets you buy are wearing down. They're going to need replacing. They're losing value. That is something we need to take account of. So if you're a smaller owner managed business, like I said, I would focus less on EBITDA, focus more on short-term cash flow, making sure you've always got the cash, and profitability, making sure you are profitable, and your key performance indicators.